Hey everybody, good afternoon. Welcome to Ready Set Live. Today is Wednesday, the 19th of August. We're in the dog days of summer. This is when market activity really gets very quiet. A lot of people on vacation, a lot of people hanging outside, hopefully, and enjoying the rest of the summer. Not a whole lot of trading going on. So with that in mind, let's get over to today's points and the trade of the day. Guys, let me know where you're coming in from today. Where are you joining us from today? I am coming to you live from Greenville, South Carolina, the textile capital of the world, formerly. All right, we got Hiram in Palm Coast, Florida. We have Vaude in Cincinnati. Welcome, Vaude. Let's see who else is coming our way here today. We have Chayo in Nigeria, excuse me. And we have the Crypto Rush from Southern California. Rod's coming to us from Columbia, South Carolina, Lowell, Massachusetts, Miami, KSA. Awesome. All right, everybody, welcome aboard. Again, my name is Doc Severson. And today we're going to be going over the 4 points and trade of the day. So I've shaved 20% of the points off today because we have so little going on in the markets today. That's okay. So we'll increase that to 5 points next week. So welcome to our live trade of the day session. We're going to do this on a weekly basis. Make sure you hit the notify bell to be notified when we get started here. So we typically don't drag our feet too much, and we'll end up closing by half past the hour. Hey, Frank in rainy Florida, welcome aboard, man. So today, what are we going to talk about? The equity markets. What's working in the equity markets today? I'll go over the crypto market, and by request, I was asked to explain how to short, and then we'll go over the trade of the day for today. All right. Let me know if you have any questions as we get near the end of the session today. If there's any questions, we can go into overtime, but if there's nothing else, I'll let you guys run. Okay, equity market review. What's going on in the larger equity markets? It's been a wild year, right? We dropped, some 60%, and then we've gotten it all back again. The S&P just reclaimed the all-time highs once again, and those highs from earlier in the year in February. So it's been a long round trip, and one that shocked a lot of people, not really myself. We've seen this movie before. The S&P 500 is, as you can see right now, just up at the all-time highs. However, the issue here is that it's running out of gas. This is my CHOP index, what I call the fractal energy indicator. And this shows the linearity of the move. And typically when it's down in this area, moves go into consolidation. You can see this one here did the same thing, went down into exhaustion. Range expansion goes to range contraction, and then it just flips back and forth. It just oscillates between those two states. Right now we're in range expansion to the upside. And yeah, the sale has ended. The sale ended back here on March 23rd. So range expansion leads to range contraction. This is what I'm anticipating, is seeing range contraction happening on the S&P 500. We're already seeing that in several other markets. You can see the Russell 2000, which is the small cap index in the US, has gone to range contraction in exhaustion. Not a surprise. The Qs, man, you just can't keep the Qs down. The Qs are the NASDAQ 100 top stocks of the NASDAQ composite. This is the ETF, and one of the most tradable instruments in the world right now, along with the spiders, and it cannot be stopped. Although today we've seen a little bit of a dip to start things off. It reclaimed the highs, and then it's given it back again. So this could be a good place to pause. You can see that this too is going into exhaustion. And then as we get to the Dow, it's very similar to what we're seeing in the Russell 2000. Dow's got a nice uptrend. It has not reclaimed the highs. So keep that in mind for the small caps as well as the industrials. Still not reclaimed the highs. something I want to bring to your attention is this notion, and you'll hear this talked about elsewhere, rarely though. I don't see this talked about very often. The notion of this broadening pattern. So the volatility is increasing from where it was back here in 2018. We're getting more instability into the market, and every time that we see this, the rallies are going to be stronger, as we're seeing right now. And when the crashes come, the crashes are going to be more dramatic, and they're going to have little warning to them, as we saw earlier this year. So get ready for more volatility. Right now, we still have an uptrend in place. This is not the time to short this market yet. We still have an uptrend in place. However, this is probably going to go a little further than people expect. And then when we crash, it's going to be harder than people expect. Right now, we're still in accumulation. Don't forget that. So 5 tech stocks drive 22% of the S&P 500. Microsoft, Amazon, Facebook, Apple, Google. Sometimes people call these the FANG stocks, but Netflix really doesn't contribute that much in terms of market cap. Microsoft actually is the #1 market cap stock that's out there. So as these stocks go, so goes the rest of the market. So watch these ones intently. The problem here is that you're getting fewer and fewer stocks with any strength. Only 60% of the S&P is above the 200-day moving average. This is not a healthy divergence. So notice that back here in June, we had a much higher number versus the 60%, and this was not all-time highs. So we're getting fewer and fewer stocks actually participating in this rally, and it's being driven by tech. It's being driven by the big ones. So as long as interest rates stay low, though, the only game in town with yield is equities. And maybe some people would say crypto too. If rates start to rise, investors will bail on stocks or fixed rate instruments. So stay long. This is not a recommendation, but this is what I'm doing. Stay long, but be wary of retail euphoria. That will mark the intermediate top. Again, I'm not saying the top of the bull market or anything like that. We're going to be dealing in intermediates, intermediate highs, intermediate lows, right? Even the bear market that we saw this year was just an intermediate low. Normally, bear markets last 18 months. This one lasted 3, right? This is the nature of the game. The game is changing under our feet right now. So what's working with equity markets to trade them? I talked about this last week. I'll still talk about it this week. Cash secured puts. Some may call them naked puts. These are actually cash secured puts. You have to have the cash in your account to be able to trade these. They're still working great on pullbacks. So here's AMD. This is one that I love. AMD, I don't want to buy it up here at $80 a share. I don't. So what I do instead is sell puts down here at $60 a share. I'd be a willing buyer of AMD at $60 a share, but not at $81 a share. So what I do is I sell puts and I collect per contract. So for every contract or 100 shares that I obligate myself to buy, I'm receiving $61. And that's it. This is as passive as you can get in terms of passive income. There's nothing that you have to do. Nothing that you have to do. So this is a very bullish stock, and I love, you can see this is a 200-day moving average. As long as the 200-day is moving higher, sell puts on pullbacks on ascending stocks. It's so simple, right? It's so simple in this market. You don't have to be a rocket surgeon, right? Sell puts into pullbacks. This is Comcast. Selling into pullbacks, selling the $40 put. I'd be a willing buyer of Comcast at $40 a share. This is one of these stay-at-home type of, isolating economies type of stocks, right? So we're getting paid $83 for every contract, for every 100 shares that we're willing to buy. We get paid $83. It goes right into our account. That cash goes right into your account. It's like selling insurance is what you're doing. The other trade that we're doing is what we call the 0 days to expiration. So we're selling options that are expiring at the end of today. We've already closed out our 0 DTE trade. We were in it for about 45 minutes today. So we're averaging an 83% win rate and a profit factor of $4.14. So for every dollar, yes, for every dollar that we lose, and there will be losses on any trade that you do, for every dollar that we lose, we're making $4.14 in profits, which is pretty outrageous. And I think part of the reason why this number is so strong is because we're seeing these overnight gaps that are hitting the market, and then they hit the cash market and nothing happens for 6 hours. Overnight gaps, and then the market just consolidates for 6 hours. And also we're getting very, very flat price action these days. Very flat price action. We still have a VIX, which is in the 20s. Right now, based on what the price is doing, the VIX should be about 10. So the implied volatility is still overstated right now. So these are outstanding numbers. We'll continue to do this as long as we can. We're trying to be aggressive with these. Average hold time for this trade is less than an hour. And I believe we're doing something on the order of $65 or $70 on average per trade. So think about that. If you could make 65 or 70 bucks a day doing these things, I mean, that would make things a lot easier. What's important is the cash is not in the market overnight. We're not holding these things overnight. It's a one-day trade, as little hold time as possible for this. So not only are we doing the cash secured puts, which is sort of the foundation, the ugly, foundational concrete basement of your trading plan. These are just trades that just sit in the background and they just churn, very passive income. But then we do more active trades like this, like the 0 DTE trade, which are, so we have both active and passive income coming in. That's important. So if you're trading stock though, if you're not doing options, if you're trading stock, you have fewer things left to do. You have to buy low, sell high. Wait on the base to form before going long. Never chase after something. Never chase after something. So what I mean by not chasing after something, here's like Amazon. So Amazon breaks out and it goes parabolic. And this is where all the retail chase after it. And they go, oh, I want a piece of Amazon too. And then the price goes sideways for what? Like 2 months here. It goes sideways from the middle of April until about the middle of June. Goes sideways for 2 months. And at this point, most retail traders say, well, this is not working out. I better just get out of this trade. And then, of course, as soon as they sell out, it takes off again. And then traders chase after it up here. Never chase after something. Never, ever chase after something. Wait for the base to set up. And in this case, we have a nice ascending triangle that this is just breaking out from, in this case, for Amazon. And oh, by the way, you don't have to have $3,200 a share. You could buy fractional shares if you use something like Robinhood, or you got, Schwab stock slices, and there's Fidelity does this as well too. So fractional shares are very, very empowering for the new retail investor. Okay, so we're trading what we see, not what we think might happen. I see the message boards and forums and Reddit subreddits every day, and people are talking about what they think should happen based on their linear logic. Market doesn't care about your linear logic, especially for those of you that are engineers or programmers out there. I was a former engineer, so full disclosure. And I thought that linear logic applied towards the markets. It does not. You have to understand that markets are irrational. It's being driven and traded by millions and millions of irrational human beings that do not know how to contain risk on their trades. And so they act very irrationally when things go awry. This is why markets move. So don't expect your linear logic, your subroutines will work in the market. They do not. So we trade what we see and not what we think should happen. So we're not shorting the market and trying to punish it because we missed out on the move, which is what most of us are doing. So when the downside comes, it will occur during the overnight session. When we do get downside, it will gap down. You'll wake up one day and all of a sudden the futures will be down 40 points. And you're like, whoa, where did that happen from? That's the way markets move now. Let's switch over to the crypto market. Let's talk about the crypto market. So we've had a nice rally over the last month or so, really. So this started in the latter part of June. And here we are, we're getting to the latter part of August, and we're still holding those gains. So it's not going up every single day. You don't want it to go up every single day, guys. I know you're getting impatient. You've been waiting for this thing for the last seemingly forever, last 3 years, and you want it to go up every single day. Well, it's not. It's going to chuck off all the pikers every single day. If you're a weak hand, the market will find you, and it will punish you, and it will send you packing. Meanwhile, as soon as you get off, it'll take off again. You got to have a strong hand. You have to have conviction for these things. So this is a BTC, or Bitcoin versus the US dollar, and it's staying within its expected move. And this is as measured on the option chain through Deribit. So people are expressing their forward projection for the movement of this. And there's a 68.2% probability. There's a 68.2% probability that we see the price will stay within these envelopes. All right. Here's Ethereum versus the US dollar. And this one, we're getting some nice breakouts from here based on consolidations and bases. But the problem is, if you don't understand that you have a larger time frame anchor chart, which may be an exhaustion, which is the case here for Ethereum, then it may not, you may only get very short little breakouts before it has to consolidate. So anchor charts in exhaustion for Bitcoin, for Ethereum, and for most of the top 10, top 20. Into consolidation. Consolidations is a good thing. It's going to test your patience, but you'll understand more how the market actually moves once you figure that out. So again, guys, we've waited 2.5 years for this breakout. Be patient on the altcoins. If you see Bitcoin moving like crazy, don't buy an altcoin which is based on Bitcoin, because it won't go anywhere. Consider another reference currency or find some way to get that through USD. Okay, so I got this question coming in. I want to short. How do I do it? I want to short the market. How do I do it? All right. First of all, ask yourself why. Why would you want to do something like that? Markets are heading higher right now. So are you upset that the stock or the coin left you behind? Do you feel betrayed? This is very common. Psychologists have determined that the pain of missing out on a move is greater than that of a normal stop loss. We've all felt that, right? You're sitting on the sidelines, you're waiting on a pullback, it keeps going higher, you're waiting on a pullback, you're trying to be patient, and you can't take it anymore, and you buy in at the highs. We've all done it. We just couldn't take it anymore. We feel, and man, does it piss you off, right? The thing takes off without you, and you don't get any shot. And this is because human beings are irrational. They will chase after stuff. So not only do the bears feel in great pain, and they're buying back their positions at enormous pain, right? They're just, oh, I can't stay. I'm getting out on the market. I'm just punching out on a market order, buying back my positions. That drives it higher. And then you got people that are sitting on the sidelines that can't take it any longer. They're buying on market orders. This is why the asset's going higher like that. And you're sitting on the sideline. You're trying to be patient. You're watching this thing rip to the upside. It's driving you crazy. You can't sleep. You're asking, should I get in? Should I get in? Is this a good time? You're asking everybody else like they know. They don't know. Nobody else knows, right? This is one of the toughest things to handle. And this is even worse than a sell-off, is a market that's gone parabolic. Okay? So market tops are usually a process. When I say that, market tops usually handle something like this. They go up and they throw everybody off, and they go up again and they throw everybody off, and they start getting very noisy up here before they start to really reverse. Market tops are usually like that. Now, market bottoms are usually very are an event like that. Market bottoms are usually very sharp. But market tops rarely stop and reverse right at the highs. And they don't ring a bell either. They don't get up there and they say, hello, everybody, time to get off. It's your stop. Time to get off. Nobody rings a bell when it gets to the top. Markets reverse when everything seems to be going perfectly. Think about what the news flow was like back in February before the markets reversed. Everything was actually going pretty well. And then all of a sudden, we had this little exogenous event happen, and it threw the market off. You can think of the market as kind of like this high wire tightrope act, where everything is just perfectly in balance, but one little breath of wind will knock everybody off the will end of wire. Or you can also think about trying to steady a heavy weight at the top of a long, skinny pole. You know that you can do it, but if you have any instability at all, that thing is going to come crashing down. This is how markets move. So you're still convinced that you want to go short. All right. Do not short stock. Do not short your spot coins. Don't sell to open spot coins like that. Okay, so if I'm saying don't do this, why not? Short stock holders have the honor and the privilege of paying the quarterly dividend. So you get to pay the dividend. Oh, thrill. Instead of receiving a dividend for owning the stock, you get to pay the dividend. Lovely. Okay, that's the first strike against you. You're also holding an instrument with unlimited upside loss. Unlimited upside loss. That doesn't sound very good. Many spot brokers just won't let you trade short coin. They won't allow you to do that. You have to have margin and you have to go through all these hoops to do it. You get charged I didn't even include this, but typically you get charged an interest rate charge just to borrow the stock. So they make it very difficult for you to do this. Shorting stock takes special margin permissions. Stock must be easy to borrow. Got to be able to borrow it from somebody. Remember that most assets are in an uptrend. So you're going against the trend, you're going against gravity and everything else. Okay, it's cool to be counterculture and stuff like that. It's great to be the first one, but bears are always too early. So you still want to short? Okay. The best way to do that is to set up with limited risk instruments. Use limited risk instruments. You could use futures. That works. But my favorite way to do this is with options. With crypto, there's only a couple of optional assets, right? You get Ethereum, you get Bitcoin, you got Deribit, you got LedgerX. You may have a couple of other ones that have come along since then, but really there's only a couple of assets that you can trade options on. Now, when it comes to futures, there's a few more than that trade futures. You can get, I forget what BitMEX is doing these days, but like EOS, and you've got Cardano, and there's other assets that trade futures on there. And futures are great because you can go short as easily as long. They're frictionless. You don't have to worry about that stuff, right? But it's still an unlimited risk instrument. You're basically leasing a contract for the time that you hold it. With equities, however, there's thousands of stocks that are optionable. It's an infinitely more flexible market, much more mature market. So you can create bearish trades by buying long put options, which work just like buying an insurance policy. The further down in value the asset goes, the more money you make on that put option. But they are somewhat expensive and they only have a limited lifespan. Just like when you buy insurance, there's the limit to the policy. The policy has a duration. The policy has a term to it that after that term expires, you're SOL, right? There's also simple option spread strategies available that involve the sale of one or more options in addition to the long put. So you can set up a vertical spread, which helps to offset the cost of the insurance. These are simple to do. If there's any interest in this topic, I can talk more about it next week. So let me know. Let me go into today's trade of the day. Today's trade of the day is something that we featured in our newsletter yesterday, which is Chainlink. And I said, man, if I could just get Chainlink down here at $15. And it obliged me by one more time coming down here. What I like about Chainlink at 15 is a couple of things. So first of all, technically, it's the first decent pullback that occurs, which is good. And it came down to a 38.2 retracement, which is that's probably the best retracement that it can come down to. And there's 3 hammers in a row right there. So that's good. This is also a swing test. There's a swing test here, intermediate high, comes down and retests this from above. That's a really good setup for Chainlink. Okay. I don't know if you'll be able to get it at 15. It may have already left the station at 15. So if you want to, what you can do is you can set up for a breakout of 18. If you can't get it for 15, then take the breakout entry at 18, but you won't have as much edge for that. Okay, so a couple more things here and I'll let you guys go. If you want tomorrow's trade of the day, then join our free Discord. We're just trying to build a great community of traders that are out there. There's no cost to doing this. There's no obligation. We're not going to pound on you. You know, it's very low friction, guys. Just come and join us and hang out and learn something. It's all for free. So you can actually get access to our $100 a day course for free as well, too. So you can see what we're all about at Ready, Set, Trade. Okay, so readyset.trade/free gets you that invitation onto our Discord. And also, I'm on deck this Monday at 1 p.m. Eastern Time. I'm going to be giving a 1-hour presentation at the Mad Hedge Traders and Investors Summit. So I'm on Monday at 1 p.m. Eastern. And let me go ahead and copy this into the room one more time. If you look at the chat window, you can see the link to join. I would encourage you guys to do that, even if you don't think you can make it, because what they'll do is they'll send you the replay later. There's a lot of really top talent that's given presentations on this over 3 days. So all of this stuff is free. And, you know, this is a great opportunity to learn something in these sort of like dog days of summer before everything really hits the fan starting in September. September is when the market really takes off. It really starts to move because everybody's back, everybody's engaged, and everybody's looking to position themselves for the fourth quarter. It all comes down to that. It's all like the final stretch, right? It's almost like the fourth quarter of any kind of a match or football game or something like that. You know, can you make it into the end? Can you close strong? And so this is why it's important for you to get all your education out of the way right now so you're ready and you're engaged by the fourth quarter. Okay. So let me know if you have any questions. I think I did see a question from somebody that was in there that wanted me to go take a look at something. There's a 5-minute chart of the S&P. We're coming down just a little bit today. And somebody was asking me to look at XIO. And honestly, I don't know what that is. I have no idea what that asset is. It does not appear to be. So Crypto Gardener, I don't know what this is, or it's not being charted in TradingView. I don't know if it's Zor. If that's that, then this is not something you want to go after. That's only a 5-minute chart. Okay. Can I look at Tesla? I would be happy to look at Tesla. Okay, Tesla this is the same thing, guys. Here's the base. Here's the base. And this, you wait till the base is established. And it helps to use something like the RSI Laguerre. So you stay away from chasing after stuff when it's in exhaustion down here. And you wait till the base is set up and you have a high level of energy up here on the CHOP index. And then if you want to take that in conjunction with the RSI signal, I don't need the RSI signal. I can simply wait for a breakout of a descending pattern here. $15.37, way to go, Coob. Okay, so that's Tesla. So right now Tesla is also back in exhaustion. So I would expect to see this break into the next consolidation at this point. Don't forget that you have to look at what's happening at the larger time frames as well too. So the weekly chart could use a little bit of base building at this point. So it's broken out of this base with very little energy, doesn't have much left. So a few weeks at this level, I would not chase it at this level for these reasons. I hate chasing after stuff. If you can't tell, never chase after something, because if you want to be like a typical retail trader, you're chasing the highs. And I've gotten that drummed into me or drummed out of me over the years. Okay, everybody, we have hit the bottom of the hour. My pumpkin has arrived. So thanks everybody for. So what's the name of the indicator? This is the RSI in Laguerre time. This is the RSI in Laguerre time. This is only I only use this really on intraday charts. And this chart here, the yellow one, is the choppiness index. The choppiness index. And this gives me, and maybe it's time for me to do another fractal energy trading here in the room, but basically markets go between range expansion to range contraction. Range expansion to range contraction, range expansion, contraction, expansion, contraction. There is no overbought and oversold anymore, guys. Forget about overbought and oversold. If you come to me and say, hey, but that stock's overbought, it's going to go in one ear and out the other. It doesn't exist anymore. What is overbought can remain overbought almost in perpetuity with the amount of money that's flowing around in the gutters these days. Okay? Get away from overbought and oversold. It doesn't work anymore. Find a different way to analyze your markets. Okay, last one here. Last one. Let's see. FTM. FTM. Let's look at FTM. That doesn't appear to be the right coin, because that's Fortum Resources and it's not Phantom. Okay, so I don't know what your ticker is. You might want to shoot me an email, Coob, or catch me tomorrow morning. All right, thanks everybody for hanging out with us here at Ready, Set, Live. You guys take care, and I'll see you next week. Have a great weekend.